All right. Good morning, everybody. Good morning, all you magnificent melonheads of the world. Happy Friday, everybody. Happy Pi Day. Friday, Pi Day. How about that? Today is March 14th, 2025. And, well, it is a time to celebrate for my stackers, for my metal enthusiasts out there, because the price of gold has hit $3,000 for the first time ever. A new all-time high, new record. Gold continues its very steady and very orderly rise as, well, the whole world goes to hell in a handbasket. And, well, it's just been beautiful to watch. Let me just say, from a personal note, yesterday I'm sitting here, I'm watching gold rise, I'm watching silver rise, I'm looking at the price of eggs, and then I look out the window at my chicken coop, and I can't help but just, sing "Damn It Feels Good to Be a Gangster" while shoveling bird shit into a compost pile. Look, things are looking pretty good for the metal stackers. We've got spot gold very briefly touched above $3,000 this morning. Right now it's hovering at 2,990 something. The front month contract for gold is firmly above $3,000 and still there. And gold shows no signs of relenting. Meanwhile, silver is rising along with gold, but still being held way back, underperforming gold quite a bit, even though it is making, we'll say, new annual highs, new yearly highs. But silver still drastically underperforming, being somewhat held back by its industrial uses and applications, and industry not doing so well right now. But interestingly enough, this tariff story, and I can't help but feel like the longer the indecision in tariffs goes on, the better it's going to be for gold. Now, tariffs themselves are not necessarily good for gold, but as long as we're sitting here waiting for the tariffs, the gold is flowing into the United States. 23 million ounces of gold has left London bound for U.S. vaults since President Trump took office. That is something like that. I got the number here. $75 billion. Is that something in the tens of billions? And, it's all people trying to front run the tariffs, and the tariffs have been delayed. And so the gold is still flowing. And then the tariffs were delayed again. The gold continues to flow. And, I know a lot of my metal stackers out there are highly skeptical that some of these big institutions have as much gold as they claim to have. And they're all taking a long time to load their gold onto the planes. Remember that talking point a few weeks ago, the LBMA executive talking about how it took him forever to get into work because there was a lorry in the bullion yard. Yes. Oh, that's my British accent. I know it sucks. But anyway, the longer this goes on, the higher the likelihood that maybe we get an answer on that. Maybe somebody really doesn't have as much metal as they're claiming to have. And so, I'm just sitting here. Everybody's like, oh, the tariffs and the uncertainty, and the stock market doesn't like it. Well, I'm watching bubbly tech stocks decline in value while safe haven investments like gold go up in value as the metal is leaving Europe, flowing back into the United States, where possession is 9/10 of the law. And I'm just like, what the problem is? I mean, I don't really see a problem with the current configuration. I know a lot of the people who have been telling me I'm crazy for the last couple of years see lots of problems because they YOLO'd into zero DTE options and tech stocks that are trading at 40 times sales. Probably not too good for them, but people who didn't do that are doing just fine. And in totally unrelated news to the price of gold rising astronomically, we've got Germany has reached a deal on their spending bender. And, well, I'm beginning to think maybe these two might be related. Maybe there's a reason gold is breaking $3,000 as European governments figure out new and creative ways to spend their people into oblivion. Germany reached a deal with their Greens. You've got the center right, the center left, and the far left parties have come together to spend as much money as humanly possible before the new Congress or Parliament takes over in there, because the far right party, which is much more anti-war, takes over. And so they're just trying to throw as many gold bars off the Titanic as humanly possible before that transfer of power. They reached a deal, 100 billion euros for climate change projects. And guys, we talked about this a couple of weeks ago or a couple of days ago when this whole fiasco started in Europe, and I said, watch what they do. Because they snuck the word defense and infrastructure. The whole point of this compromise on spending, the whole point of this bill and this constitutional change is supposed to be for Europe to rearm because they've let their militaries atrophy while being dependent on the United States for their own defense. And then after that blow up in the Oval Office a few weeks ago between Zelensky and Trump and Vance, Europe realized maybe we can't bank on the United States to defend us. Maybe we should defend ourselves. What a concept, right? Countries defending themselves instead of depending on United States taxpayers to foot the bill for their defense. Whoa, God, what's happening? Oh my God, dogs and cats living together, mass hysteria. And I remember saying as soon as they started releasing these stories, they started talking about defense and infrastructure. And I said, watch out. It's going to be a pig trough. They are going to sneak in all their pet projects and all their favors and kickbacks to the people that got them elected. Mark my words. We got confirmation of that today. What does $100 billion of climate change infrastructure have to do with Europe defending itself from Russia, from this imaginary threat of Russian tanks rolling across Western Europe, which they couldn't even get 30 miles deep into Ukraine? How are they going to get across the rest of Europe past Poland and Germany? I don't know, but everybody thinks it's like this boogeyman that's going to happen any day now. What the hell does climate change have to do with any of that? If you said nothing, congratulations, you've been paying attention. It's just another Inflation Reduction Act. It's just another pig out. Let's see how much money I can get for me and mine at the expense of they and theirs. And it's what Europe excels at. And it's why Europe is the way it is right now. Now, look, guys, this 100 billion euros for climate change, the size of this package that they're talking about spending, this is the equivalent. If you adjust it for the exchange rate and adjust it for the size of the German GDP, this is the equivalent of a $2 trillion spending package here in the United States. All right. This is bigger than the Inflation Reduction Act and the CHIPS Act combined. This is absolutely a spending bender. And of course, the euro is strengthening again this morning. German bond yields are rising as people are selling off German debt because, oh, that's right. How are we ever going to pay for this stuff? Again, if you answered you can't pay for this stuff, then congratulations, you're paying attention. Inevitably, this is going to cause problems in the German bond market and the rest of Europe. And the European Central Bank will ride to the rescue with Nerpenber. Nope, not Zerpenber, not zero interest rate policy and money printing. NERP, negative interest rate policy and money printing. And well, that ought to just speed us on our way to excellence in fighting inflation, won't it? They're going to have to inflate their way out of this to try to spend it, which means more pain for the average European citizen on the horizon. And again, it's not a coincidence that gold is breaking $3,000 on this news. Now, on the domestic front, as Europe inflates, pay attention. There was a very important statement from Treasury Secretary Scott Bessent yesterday. Europe inflates, and it looks like the U.S. is trying to deflate. Scott Bessent was on CNBC yesterday, and he was pressed by Sarah Eisen about, the volatility of the stock market and people's retirement plans and things I've been saying for years while they endlessly pumped sell-side research on CNBC and leading people in AI stocks. And I'm like, guys, accounting fraud and round tripping and all kinds of problems going on, not to mention like money laundering for drug cartels going on in the AI space. Oh, never mind this guy. Just put all your retirements into tech stocks. And now that those tech stocks are falling, they're like, why would Donald Trump do this? Well, Scott Bessent said, and I quote here, I'm not concerned about a little bit of volatility. They're focused on the real economy. In other words, guys, pay attention. Trump 2.0 is totally different than Trump 1.0. Donald Trump no longer looks at the stock market as his report card, as he did in his first term. They are intentionally bringing it down. They are deflating on purpose. And, everybody, I'm watching this story in Singapore. There's more news on this Singapore bust and the smuggling of AI servers through Malaysia and Singapore into China. And a lot of people have said they'll never break up these smuggling rings. They'll never arrest these people because it would crash the stock market. Are you guys paying attention? They're telling us they're going to crash the stock market to save Main Street. So if you're sitting there thinking they're not going to prosecute these AI firms that are wantonly violating export controls, then you're not listening to what they're telling you. And last but not least, today we got Forever 21 is temporarily Chapter 11. Another sign of the American consumer is struggling. We've got a legacy fashion retailer will be going bankrupt, or at least that's the rumor here. They failed to find a buyer, closing more stores. Another brand bites the dust. We'll see what comes out of their Chapter 11 filing. And with that, why don't we shrink my big melon of a head and let's see what's going on in these markets this morning. Don't forget that like button for the YouTube algorithm so you can come back tomorrow after you subscribe as well and have your coffee with the melon heads, because we do this one every morning. Right now, the S&P 500 is up 55 points or 1% higher. Stock's getting a little bounce here. Got a little bit of buying into the close yesterday. We ended up closing down like another 500 points in the Dow yesterday. But that buying at the end of the day has translated into this morning. So the S&P is a little bit higher here. Now, I just want to show you guys the long-term charts here just to give you an idea of the magnitude of this sell-off we've been watching. This is going all the way back to about February of last year. And now, first of all, stocks have crashed. Maybe crash isn't the right word. Stocks have corrected. The S&P is officially in correction territory. We are down 10.2% from the all-time high that was reached, what was that, in February 18th. All right, so officially in correction territory, not yet bear market. A bear market is typically defined as a 20% decline from all-time highs. So we're in correction territory, but as fast and as violent as this sell-off has been, we've only gone back to September of last year as far as where the market was. I mean, guys, there is a $18 trillion AI bubble that needs to deflate here. If you think this sell-off is done, I mean, maybe the dip buyers come in, but this bubble has not burst yet. It's got signs of bursting. It's got signs of slowing, but the bubble bursting hasn't even started yet. That's the takeaway from that one. Looking over at the Dow, we are higher by 264 points or 0.65% this morning. Again, a little bit of that buying in the close has translated to a green market ahead of the open. Now, looking at the Dow long-term, over about the same horizon, going back to February of 2024, the Dow not quite in correction territory yet. Although it's firmly below its 200-day moving average, the Dow is only down 9.2% from its all-time high. So the Dow is still technically in a bull market, not quite in a correction territory. The NASDAQ, meanwhile, is up 248 points or 1.29% higher, leading the way this morning. And looking at the long-term chart of the NASDAQ is actually firmly in correction territory, down 14.2% from its all-time high. Not quite bear market, but getting there and well below the 200-day moving average. This has been a pretty fast and pretty violent sell-off, guys. Now, another thing I would point out, we had that sell-off in July into August that ended with the August 5th taking away of the sell button and the hysteria over the Japan carry trade unwind going away. This correction has been about the same size as that. So if the dip buyers do show up here and take us higher even more, it wouldn't be unheard of. All I can tell you is there's a lot of things that smell different this time around, like the bust in Singapore, like the stories about Microsoft canceling data centers and rumors of slowing CapEx among big tech and pressure to deliver on investments in AI that have not yet materialized into cash flow for pretty much anyone other than NVIDIA. So it does smell a little different this time, but be wary of that, guys. The dip buyers could show up at any moment here. Meanwhile, the DXY is a little bit weaker this morning, down 14 basis points to 103.70. This is being driven by the euro this morning, which is strengthening on that deal in Germany. More on that in a moment. Looking over at the bond market, we've got the 30-year Treasury 4.637. That's up by 4 basis points. The 10-years at 4.316, also up 4 basis points. The 2-years at 3.973, up 2 points. And the 1 month is up 1 point at 4.301. Yields are a little bit higher this morning. Nothing to worry about, though. Now, let's look at commodities. And there we go. The top line on the commodities chart. Gold, the April front month contract, $3,005.61. That is the 3K threshold. Now, just below that, you got spot gold is at $29.94. A little bit below that $3,000 mark. We were at $3,004.95 at one point this morning. But spot gold is up about $5 as of now, 0.17% higher. We've got spot silver is higher as well. It's up about 9 cents at $33.96. After briefly trading above $34 this morning, it's 0.3% higher. Now, I like the shiny. Copper is down by about 0.1%. Platinum is up by 1.1%. Palladium is up 2.8%. And oil is up by about 1/3%. April WTI futures at 66.78. That's up by about 1/4 this morning. Looking over at the Bitcoin chart here, guys. Once again, watch that 200-day moving average. This is starting to look really ugly for Bitcoin here. We're at $83,389 right now as priced on Coinbase. Although that's up a couple of thousand from yesterday, look at how this red line is acting like a ceiling here. 1, 2, 3, 4, 5 days in a row that this red line, the 200-day moving average, has acted as resistance. This is looking like a breakdown is imminent in Bitcoin. We need to trade above this, retest, and bounce higher in order to reject that level. But right now, it's not looking good here. A couple days in a row, we failed. It feels like Bitcoin is about to do one of those. We'll see. Maybe these spending plans in Europe are going to change that. Maybe we'll see people running from their native currency into dollar and euro alternatives. But for now, it looks like gold is receiving most of those funds, not Bitcoin. And let's talk about gold. Gold breaks through $3,000 as Trump turbocharges record rally. This one in Bloomberg this morning. Gold prices passed $3,000 an ounce for the first time ever, driven higher by a central bank buying spree, economic fragility worldwide, and President Donald Trump's attempts to rewrite the rules of global trade by imposing tariffs on allies and strategic rivals. Bullion climbed as much as 0.4% to $3,001 an ounce on Friday. It was actually as high as $3,004. The move through the psychological $3,000 level drives home gold's centuries-old role as a store of value in turbulent times and as a gauge of fear in markets. In the last quarter century, the price has risen tenfold, outperforming even the S&P 500, the benchmark for U.S. stocks, which quadrupled over the same period. That's interesting. The pet rock, right? The ancient dinosaur of investments, the unexciting, unsexy gold is 10x'd in the last 25 years, outperforming even the S&P. Now, again, guys, I would just mention, I think when they say it outperformed the S&P, I don't think they're accounting for dividends. I think if you account for dividends and compounding, the S&P probably still narrowly outperformed gold over that time frame, but adjusted for risk, it's not even close. As traders braced for tariffs, U.S. prices for gold surged above other international benchmarks, prompting dealers to rush bullion into America in large volumes before the levies come into force. More than 23 million ounces of gold worth about $70 billion flowed into the depositories of New York's COMEX Futures Exchange between Election Day and March 12th. The influx has been so vast that it helped drive the U.S. trade deficit to a record in January. Now, that's also pretty important there, guys. And I didn't even think of that when I was talking about that big negative GDP number that the Atlanta Fed put out and about the blowout in the trade deficit. That gold coming from London to the U.S., it looks like negative GDP growth on paper because it's technically an import. Now, I don't think gold flowing from Europe into the United States is necessarily a bad thing for the U.S. economy, but on paper, as we measure GDP, it does not look good. It makes things look worse than it really is. Now, there's a couple of charts in this Bloomberg article I wanted to show you guys. The first one is this one. Gold beats the S&P 500 this century. The line in black is showing the price of gold. Now, this is normalized to 2000 levels, or the year 2000. So 100 would be the price has not changed. And then the blue line is the S&P value normalized to 100. You can see gold has more than 10x'd, while the S&P has only gone up about fourfold. The gold has vastly outperformed stocks here. Again, though, I don't think this is accounting for compounding or reinvestment of dividends. I think if you have been reinvesting the dividends for the last 25 years in the S&P 500, your performance is probably comparable to gold, if not better than gold. But again, you've taken a lot of risk. You've rode through a lot of market crashes. Gold, you don't have that risk. Another one that's important is central banks speeding up their gold purchases after 2022. This is important, showing the net purchases of gold by central banks across the world. And for the last 3 years in a row, more than 1,000 tons, not ounces, 1,000 tons of gold has been bought by central banks around the world. At the end of 2024, China took a little breather, but they started that back up again at the end of the year and into this year. So I have every reason to believe that this will continue into 2025. So all you guys who bought during the silver squeeze in 2020 and 2021, congratulations on successfully front-running central banks around the world. And looking at the gold chart, the one thing that I want to show you guys here, and again, we're going back to about February of 2024, is that this has not been one of those climbing a cliff, or as Mish said, it's been climbing a gradual hill, not climbing a cliff face here. This has been a very orderly rise over the last year and a half in the price of gold. And that tells me it could continue. Okay. The last couple of days, we've had a couple of big green candles up here. But this isn't anything that looks like it's going to take the elevator down, at least not in the short term. Maybe I just jinxed it there. Quick, everybody find some wood to knock on. Now, talking about silver, however, silver, it has done well. It is rising with gold, but this is over the same time frame here since about the beginning of 2024. This red line represents the high from the silver squeeze. You can see we've taken that out now. But silver is kind of lagging here. Silver has not kept up with the rise of gold. It hasn't even taken out its high from October. That tells me silver has a lot of catching up to do. The gold to silver ratio is still sitting around in the mid 80s right now. Historically, on the high end, we could see silver start to outperform gold at some point here. And again, I think the industrial demand is holding it back for the moment. But silver remains the most, in my opinion, the most undervalued asset in the world at this point. All right, now let's talk about what's going on in Germany. Merz is said to reach a tentative deal with the Greens on German debt. And guys, I told you this was going to happen. As soon as I saw that word infrastructure in the article a couple of days ago, I knew they were going to do this. German conservative leader Friedrich Merz reached a tentative agreement with the Green Party on a debt-funded spending package for defense and infrastructure. People familiar with the discussion said the deal needs to be approved by party lawmakers, the people said, on a condition of anonymity as negotiations go on behind closed doors. Now, let's skip over this one because where was it? Okay, here we go. The agreement on Friday spelled out that the infrastructure funding would be earmarked for new projects and that 100 billion euros will be channeled to the government's existing climate and transformation fund, according to news organizations RND. Handelsblatt reported earlier that an agreement had been reached. Guys, 100 billion euros for the climate change fund, so they could defend themselves from Russia. I knew this was going to happen. As soon as they started talking about a defense and infrastructure agreement, I knew infrastructure, anything could be infrastructure, windmills, solar panels, gender reassignment surgery. Sure, why not? It's all infrastructure, depending on who you ask. This is a pig trough for these people to pig out at the expense of future inflation among their own citizens. And then when that inflation arrives, they'll just be like, oh, this is because of greedy corporations, not because of our horrible fiscal and monetary policy. Certainly not. I knew as soon as the German Greens had not signed on for the deal that it meant they wanted to get more money for their climate projects. And that is exactly what we have. And now, of course, the reaction is very predictable. We've got German bond sell-off reignites with debt talks in the final stages. This is a little dated, but I just want to show you guys here. Look, the euro strengthening again. You got a red candle this morning. The euro is getting stronger versus the dollar. This is USD EUR. And this was set in motion during that blow up between Trump and Zelensky a couple of days ago in the Oval Office. Ever since the euro has strengthened because it became apparent that Europe was going to spend a whole bunch of money on defense and other crap, and that money was going to come from the bond market. And well, when the demand for euros exceeds the supply of euros, euros get more valuable. And so this chart has fallen. That is the euro strengthening versus the US dollar, and that is happening again this morning. And we have got yields on the German 10-year Bund are rising once again, 2.912%, up another 6 basis points. Not quite the high from a couple of days ago, but the German bond market is selling off on this news. People are getting out of German debt because they know these interest rates are going to rise as soon as hundreds of billions in borrowing starts resulting in new issuance of German bonds, a whole bunch of new bond supply. If the demand stays the same, that means the price falls and the interest rate rises. Sooner or later, Germany won't be able to stomach the higher interest rates. Their central bank will start lowering interest rates. They'll go all the way into negative territory once again. And of course, they will spin up the money printers. Nuremberg coming to a Germany near you. Now, as Europe inflates, let's talk about the U.S. possibly deflating. Now, the U.S. is still a long way from deflation, right? We had inflation prints this week, although they were a little lower than expected. They were still well above the Fed's 2% target, and prices are still rising. But much like how inflation begins with money supply, and then it translates into asset prices, and then into consumer prices, and then wages, the deflation starts with assets as well. And pay attention to what Scott Bessent is saying here. Treasury Secretary Bessent said the White House is focused on the real economy and not concerned about a little market volatility. Guys, they're telling you what they plan to do here. They're telling you they don't care about this asset bubble, that they are more worried about the lived misery of 90% of the population over the last few years as the stock market and home prices and everything else has gone to all-time highs day in and day out. Life has gotten more miserable for everybody on Main Street, or at least 9 out of 10 people. And that is what they are focused on here. They will pop this bubble if they have to. Treasury Secretary Scott Bessent said Thursday the Trump administration is more focused on the long-term health of the economy and markets and not short-term gyrations. We're focused on the real economy. Can we create an environment where there are long-term gains in the market and long-term gains for the American people? That's a little cake and eat it too there. I'm not so sure. But Bessent said on CNBC's Squawk on the Street, I'm not concerned about a little bit of volatility over 3 weeks. Now, that's something of an understatement there. I'm not concerned about a little bit of volatility. All right. We just talked about the S&P down 10%, the Dow down 9%, the NASDAQ down 14%. I think this is worse than a little bit of volatility. Okay. That being said, what he's saying here is I'm more worried about what's going on Main Street. The comments come with markets in a state of turmoil, largely centered on President Donald Trump's near daily moves on tariffs against major U.S. trading partners such as Canada, Mexico, and China. Major averages have moved towards correction territory as the Dow Jones has lost more than 7% over the last month. Yeah, they're saying over the last month, it's actually down 9% from its all-time closing high. Now, this is important, guys, because while Bessent is saying, I'm not worried about market volatility, I'm worried about Main Street. We got this story yesterday in Reuters. And I'm telling you, the world is in for the mother of all I told you so's for me if and when this AI bubble bursts. And this one, Singapore prosecutors say U.S. server fraud case involves $390 million of transactions. Now, this is important, guys. We talked about this bust in Singapore a couple of times over the last few weeks. We talked about this company called Luxuriate Your Life, which is supposed to be a fashion retailer. They sell clothes. Why was a company in Singapore that sells clothes buying $390 million worth of AI servers, billing them to Singapore, and then shipping them to Malaysia? And nobody at Supermicro or Dell or NVIDIA flagged that as a suspicious transaction that might be violating export controls? When a fashion retailer buys $390 million of data center equipment, what were they supposed to do with it? Did anybody really think that was the end user? And where does a boutique fashion retailer get $390 million to buy these servers to begin with? Oh, well, we told them we make them check a box that says they're not sending them to China. So how could we know? I'm telling you guys, this thing in Singapore, this smuggling of chips to China, look at this in the context of what Scott Bessent just told us, how he's not worried about a little bit of market volatility. And so many of these AI bros have been in my Twitter feed over the last couple of months saying they'll never pop the stock market bubble. They're more worried about the stock market. They'll never crack down on this stuff. Well, the Treasury Secretary himself, the CFO of the country, just told us he doesn't care about the stock market. He's more worried about the real economy and, by extension, the trade war. You really think they're going to prioritize NVIDIA stock over keeping AI servers out of China? Really? Because they're telling us they won't. They're specifically telling us that won't happen. But, hey, go ahead, guys. Keep piling into, put your life savings into calls in AI companies. What do I know? I'm just a guy who's been right about this for a year and a half now. Moving on, Forever 21 weighs liquidation ahead of bankruptcy in the coming days. Another sign of the struggling consumer on Main Street that we talked about. The fast fashion retailer has struggled to find a buyer for the chain. The U.S.-based operator of Forever 21 is preparing to potentially close down its stores as part of a bankruptcy filing in the coming days, according to people with knowledge of the matter. Efforts to find a buyer for the fast fashion retailer to avoid a liquidation have so far failed, said the people who asked not to be identified, discussing private information. Talks with one potential bidder are ongoing, so maybe there's a light at the end of the tunnel there. At its height, Forever 21 operated more than 500 locations in the U.S. and at least 800 worldwide. Its U.S. footprint has since shrunk to about 350 stores. Bloomberg previously reported that Forever 21 was looking to close almost two-thirds of its location as part of a bankruptcy process. The Forever 21 trademark and intellectual property are owned by apparel and lifestyle label Empire Authentic Brands, which licenses them to the operating company that would undergo Chapter 11 process. So this is important, guys. It's the operating company that licenses the brand that's filing Chapter 11. The brand itself will continue, and this company will probably end up licensing the brand to some other operating company who ends up buying a lot of these assets for pennies on the dollar. Authentic plans to continue licensing the brand through new operating and e-commerce partners. So that is what's going on with Forever 21, temporarily Chapter 11. And guys, I just want to say thank you very much to Armando Reyes. We'll say Reyes. We had a lot of discussion on the pronunciation of Armando's name the other day. He says Germany is rising against Volkswagen is going to be shutting down vehicle creation to start building tanks. The N words are coming. I don't want to say that word. Look, let me just say this one thing about using that word. That word needs to be reserved for the most egregious examples of human loathsome people. I see that word thrown around way too much. And it's thrown around way too much. Anybody who wants lower taxes is that word. Anybody who wants a border wall is that word. All right. It cheapens the word when we throw it around like that. And when we cheapen the word and when we throw it around like that, when the real Nazis pop up and somebody points and says, look, a Nazi, nobody pays attention because everybody throws it around left and right. And then you end up with Charlottesville when people don't realize, oh, wow, they really were Nazis. I didn't realize that. I'm just so used to hearing everybody described as a Nazi. So don't cheapen that word. All right. That's the one thing. Honestly, I see what's going on in Germany right now and the way the German government operates. I'm more inclined to say they're a little bit more like this Stalin and the communists or the Bolsheviks, to be honest with you. I don't see radical nationalism like we had with the Nazi Party. I see a lot of populism, a lot of collectivism, a lot of globalism. So I wouldn't use that word. Now, that being said, Volkswagen factories, they're talking about building tanks. That's probably what they're going to do. Hey, maybe they'll even build some tanks that work. What a concept, right? NATO did an exercise a couple of months ago. I guess it was about a year ago now. And they had these infantry fighting vehicles, which is like the equivalent of the American Bradley. I forget what it was called. It was like the Puma, I think is the nickname for this thing. And there was 20 of these infantry fighting vehicles were involved in this exercise. By the end of the second day of this NATO exercise, every single one of those 20 infantry fighting vehicles had broken down. No actual shots fired, no enemy combat, no nothing. They just broke from driving them around and using them. All 20, a 100% failure rate in an exercise. It was so bad that the German government had to pull all of their Puma infantry fighting vehicles out of circulation and put their older Cold War era IFVs back into use. That just goes to show you the decrepit state of the European military. So, yeah, great. Volkswagen's going to build tanks in their factories. Maybe they might even build some tanks that work. What a concept. Germany's got a long way to go. The rest of Europe has a long way to go. They have drastically over-relied on the United States for their defense at our expense, mind you. That has been paid for with inflation that we are suffering from and a national debt that us and our kids are going to continue to suffer from for decades. So I wish them luck on their spending bender. Have fun. And you know what? You want to give yourself 100 billion euros worth of windmills and solar panels while you're at it? Good luck. Just spin up the printing press and have fun trying to blame corporate greed for the inflation when it happens again. I think people are wising up to that. Call me crazy, but I think that's happening. Thank you very much, Armando, for supporting the channel, sir. And thank you to M&J for gifting 20 Nobody Special Finance memberships. I appreciate that very much, M&J. Thank you for everything you do for the channel. And guys, if you received one of those, let her know you are grateful as well. Say thank you to M&J. And welcome to the Melonheads, by the way. Charles G is back. He says, I'm excited for the EPA deregulations that are going on. Bye-bye DEF. Oh, is that DEF, the fluid that has to go in the diesel? Are they actually getting rid of that requirement? I mean, it doesn't really do much, to be honest with you. It's just another thing that can break on your vehicle. Straight pipe your vehicles. Look, I am generally in favor of deregulation. I know the EPA, they do important things. Yes, they protect our air and our water, but in case you guys may have noticed, we kind of like forgot how to build things in this country. We can't get anything done because of the bureaucracy and the analysis paralysis and the environmental permit and that permit and that permit and, permission from your cousin's, sister's, uncle's, brother's former roommate who happens to be the secretary of red tape over at the Department of Bureaucracy and the Redundancy Department. Look, we need to deregulate. We need to drastically deregulate. I think it's pretty obvious that the pendulum swung way too far in that direction. So I am in favor of deregulating as well. Thank you, Chuck G. And Viv B. also gifted 5 Nobody Special Finance memberships. Thank you, Viv, for supporting the channel. I appreciate that very much, along with M and J. Guys, say thank you to Viv and M and J, if you please. And Uncle Fedster says, happy Friday, Jack. Your upside target for gold in 2025. You don't want me to jinx it, all right? Let me just tell you, the last few times I did a video about gold and silver, you could mark the top by the date I published that video. So if you want gold to go down, go ahead and ask me for a price target, Uncle Fedster. I double dog dare you. Look, gold's rise is directly proportional to the stupidity in Europe and to the mayhem being caused by the tariffs in the current global order of things. And I don't see either of those things abetting anytime soon. Actually, from a gold price standpoint, I kind of hope President Trump punts on tariffs by another month, because I think we continue this drain of the metal from Europe. I mean, I see metal crossing imaginary lines, crossing the ocean, coming physically into the United States. And I think overall that's a good thing for the United States, even if I don't own it personally or the government doesn't own it personally. I think the gold physically being here is good for the country. And so I hope they keep this tariff talk, not necessarily the tariffs themselves, just keep it alive as long as possible. And then, hey, maybe they actually do drain the LBMA dry and you end up with a lot of people with paper claims on gold who don't have any. And if that happens, your guess is as good as mine how high the price of gold goes. What happens when there is 1 ounce of gold and 10 people with a piece of paper that says they own it and they all start bidding against each other for it? Where does the price go from there? I'm not going to try to put a number on that. All I can say is I am happy to own gold, and I have no plans to sell any gold anytime soon. Thank you very much, Uncle Fedster. Sorry for the punt on the price target, but I don't really do price targets. Armando is back again, says, after the treaty in World War I, that'd be the Treaty of Versailles, and after being told to demilitarize due to World War II, they still haven't learned their lesson. Well, I mean, Europe and Japan did demilitarize, but that was, we're going on 80 years ago now. They have long since remilitarized. They haven't learned they still haven't learned it. Look, defend yourselves. Like I'm just of the opinion that countries should be on the hook for their own defense. Everybody's like, NATO is this all important military alliance and it would be crazy to end NATO. What was the whole point of NATO? Does everybody remember why we started NATO to begin with? Oh, that's right. To contain the Soviet Union, right? The Warsaw Pact. Well, I don't know if you guys noticed, but the Soviet Union collapsed, freaking 40 years ago, 30 years ago? Soviet Union hasn't been a thing for a long time. And what's left of the Soviet army is rusting, blown up in a field in Ukraine, or at least a lot of it is. So, I mean, the whole point of NATO is done. So now what are we left? Is the United States going to go to war to protect Latvia? Are you willing to die in a trench to protect Latvia? And look, no offense to Latvians. All right. I don't think Latvians are willing to come die in a trench to protect me, nor should they. Everybody protect yourselves. I have no problem with that. And better yet, protect yourselves and don't be an a-hole and invade your neighbors. I mean, all this, I really wonder if NATO hadn't kept growing. I mean, look, Putin started the war. Putin invaded Ukraine. I don't doubt that for a second. I do think Russia has been the aggressor here. But you think we haven't poked them by expanding NATO into the Baltics, by expanding NATO into Slovakia and all these other countries that have joined? Why has NATO grown since the threat that NATO was created to counter has gone away? It doesn't really make a lot of sense. And at this point, it's causing more wars than it's preventing. So maybe it is time that we rethink the whole global order of things. And I think we can all agree that Team America World Police has not been a good idea, has not necessarily been in the best interests of the United States. And maybe we don't do it anymore. Maybe everybody police yourselves. Everybody keep your own house clean, all right? I'm tired of cleaning everybody's house. That's just my opinion on this one. Thank you, Armando, for supporting the channel. And Gordon Guanu says, Weimar problems demand Weimar solutions. Now that historical analogy, I think, is very, very accurate, because it was the lead up to the Nazis taking power in Europe, and it was the monetary inflation that drove the entire civilization mad. That is worth studying, and I really do. Maybe we're not to that quite level yet. I mean, Weimar Germany, what they went through just absolutely boggles the mind, how much they printed money. We're nowhere near that level of money printing yet, but it's easier to do it. We just created digitally now with a couple of keystrokes. We create trillions of dollars, trillions of euros. So I could see it getting to that level. We are definitely down that road. It's not too late to turn around. But yeah, I see a lot of parallels there. Maybe not quite 1923, maybe some parallels to 1920, 1921. We're getting there. And, you know, we all did it in 2020 and 2021, and then we stopped and we told ourselves we were going to fight inflation. And now Europe is doing it again. What the heck? Did you guys not learn anything from the last couple of years? Apparently not. Thank you, Gordon, for supporting the channel. And thank you, everybody, for having your coffee with the Melonheads this morning. Thank you guys for the super chats. Shout out to my magnanimous Melonheads on YouTube and Patreon. Thank you guys for supporting the channel. I got links down below to all that good stuff should you feel so inclined. And looking forward to talking to you guys at 2 o'clock Eastern time this afternoon for our weekly get-together on Zoom. And thank you, Mom and Dad. Love you guys. And everybody, until next time, live small and dream big. And don't forget that like button on the way out.